Ryan, let's kick it off with Peugeot. Shares are rising quite significantly.
Yeah, shares surging. Look, the biggest rise in share price rise in more than a year. Note to the CEO, if you're going to lose money, lose less money than expected. That's exactly what happened with Peugeot, the company announcing that it lost 65 million euros in the first half of the year. Investors thought they might lose as much as 300 million, so they were very pleased with that news. Look, you know, analysts say the company's doing a pretty good job at reining in costs. They're cutting back their workforce by 17%. They're even going to close a factory in France. You don't need me to tell you how difficult that is. And today we heard the CEO say he's seeing the first signs of recovery. In addition to that, late yesterday, we also had the news that they got EU approval for the French government to guarantee, give 7 billion euros worth of guarantees for their bonds. So share price, again, up the most in a year, something like it was up as much as 9% earlier in the day. Francine?
Yeah, Ryan, we also had results from VW, Volkswagen yesterday. How do they compare to Peugeot?
Yeah, very different situation. Volkswagen is obviously the largest car maker in Europe as opposed to Peugeot, the second largest car maker. Look, they too had earnings, like you said, after the close, surprising the market with those earnings a day early and surprising them with the results themselves. They pulled in about $4.5 billion in profit. That's at least $400 million more than investors thought they were going to get. A bit of a surprise, particularly considering in the first quarter, VW reported a 25% decline in profit from a year on. And let's face it, the situation in Europe is not good, right? Car sales at a 20-year low. But I think the lesson from VW is they've got the right geographic footprint, for one. They're big in China, they're big in Brazil, they're big in Russia, they're big in the U.S. And that's also helped them, you know, particularly in the luxury side of things. They got this huge stable of cars that includes Porsche and perhaps most importantly, Audi, which is their biggest earner, and Audi has been doing very well. So maybe a lesson for Peugeot: make less money, try and make less of your revenue in Europe, where obviously no one's really buying cars, and also maybe try and go for the higher end of the market as well. Francine?